Welcome to Trading Lounge and the Commodity Futures Report for Monday, October the 31st, and starting with the 10-year yields here at monthly chart. And so from 1942 all the way up, a lot of us would have experienced a fair whack of this interest rate, but it's kind of amazing, really, isn't it? Taking all that time to go all the way up there and then all the way back down to here to sort of, close to or at negative rates in some cases, wasn't it? So, but anyway, that's sort of a the speed at which this has come down pretty quick here, and then it's sort of really sort of has got that nice sort of slow, a little bit of a curve here, which always gives a bit of sort of strength, really. I do have 3 waves up here so far, but the speed in which it's gone up here, I would imagine it will give us 5 waves. So 5 waves to 5%. We'll take a look at that in a moment. So yeah, if we do get 5 waves here, that means we're going to get another 5 after that, of roughly the same length, so that will take us up to 8% at that point. Then it could come down after that, so an ABC pattern, and then come down after that. But you would think those trillions of dollars of debt and printing and so on around the world, that I think it's going to probably take about this amount of time to sort of get on top of that, if ever, or whatever they decide to do in the future. But it's also quite possible to have 5 waves up here. It's possible to go back up, to these highs and above. Is that going to happen? I have no idea. I like the dinosaur here, by the way. The beginning of time, I'd imagine. Yeah, I mean, it's just sort of interesting, isn't it? It's all speculation. But if we do get 5 here, as Elliott folks, as Elliott fans, then we should get another 5 over here. That's all we can do at this stage. But you'd think with that printing and stuff that there's more there. But the markets are funny, isn't they? You got to be contrarian to a point of view, because you always seem to get the opposite of what you're looking at. So yeah, I don't know. I have no idea what's going to happen. But if we go to the daily chart and just have a look at this 5 waves here, because so 5 waves up to 5%, that's what we're looking at. But we don't have 5 waves yet, as I've yacked on about before. But it is quite clear from up here. So I could look at it as wave 1 or an A wave here to this point here, then the B wave. But it doesn't look like a B wave. It looks like a nice wave 2. B waves are normally big and complicated, and wave 2s are short and simple. So kind of gives me, and then I see this nice 3rd wave here, because normally in a correction there will be some correlation between the length of wave A and wave C. But wave C here is, it's got beautiful form to it in terms of wave 1 here and wave 2, and then 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and 5th wave. Anyway, look, I think that we could be at the top there now, and the Fed's meeting and all the rest of it. So maybe they won't do 75 basis points. Maybe they'll do 50 basis points as well at this point, being that sort of, it looks like it's sort of finished there. So we should be coming back for the wave 4 at this point. Look, to be honest, I haven't actually pulled all this apart here, but I did just go in here on the 5-minute chart to have a look to see what that, what that little downturn here means, this one here. So yeah, just on the 5-minute chart, it's not very clear, by the way, but get our teeth into something. So that's from the top here. I mean, obviously wave 1 looks good, wave 2 nice and sharp. So I was thinking all of this is wave 3 and 4 and 5. I have run my mind over this. It's sort of okay, but it's a bit of a dodgy sort of old thing. So, but that 5 waves there will produce some type of correction back up to maybe 4.2 or something, or whatever, some sort of A, B, C here, and then down again at that point. So I think that we could have started. That was really just my main point with all of this this conversation with this here. So it'll be interesting to see what the Feds deliver next time around. I think they're doing something on the 1st or 2nd of November. Look, we could still push up here, because as I mentioned, I haven't actually validated this here. But yeah, so at one point or another, 5 up to here for this. That's, I feel okay about that 5 waves here, up to 5%, and then that would give us another 3 waves back here, and then up again at that point, So, I mean, like, based on this, you would want to clear any debt on the books, for sure, So we'll see how this structure progresses. Okay, so the US dollar index here, the DXY, from the low here, I was looking up at 1, 2, 3, 4, 5, and ABC back here. So an A and a B, and then little 5 waves up here for 1 and 2, little sweeping 3rd wave up here, little ABC for the 4th. I do have a little 5-wave structure in here, so I could put wave 5 here because the British pound has gone up, the euro is still lagging, so it's a bit Arthur Martha here, but otherwise this would be wave 1 here, 2 here, 3, 4, 5 up to 38.2%. So I don't know. Yeah. We'll just have to see. But anyway, in the bigger picture, what sort of interests me is that when let's just say that we get this right for a change, and then we come down for wave 5 here. So this is the one that sort of interests me here, this point here, because we're looking for this being a wave 4. So I was thinking that when this basically does this and this, then the stock market would top out in line with the pound and the euro and whatever other currencies and a few other things as well. So this particular pattern here, this 5 waves down here, and I have moved it from wave B from here to here because I needed to get wave 4 in, and also needed to get wave 3 in here from all of this as well. So it's quite a nice fit in here now as 1 and 2, 1 and 2, and 3, 4, 5, the 3rd wave, 4th wave, 5th wave. 4th wave's a little bit small, but I can kind of live with that a little bit. That's sort of okay. And we need that 30 because it's up at the 38.2%. And we're also looking on the flip side of this, we're also looking at this exact pattern here in terms of, so when we look at this here as an A wave, a B wave, and a C wave coming down to here, that's pretty much how we're looking at the S&P 500 in reverse, and the Russell, and the DAX, and the pound, and the euro. So all of this is sort of the inverse of this, and they're all the patterns are gelling together in a way. And yeah, so I think that this will be interesting down here. Now, there's also a good case for a top being in here. So what else, apart from get to the point, Pete, is that when we've got this 1, 2, 3, 4, 5 here, and we come down for wave 5 here, anything sort of below that, I mean, when we have this 5 waves, there will be some sort of kickback here, but if we go lower than that, then it's likely that we've got a top in place at that point. But a top in place here would mean a bottom in place for the S&P and the DAX and all the rest of them, and the other currencies. So this is kind of an interesting situation here, really. But the thing is that I could say the same. I could do this pattern here on the S&P and all the other markets and do the same thing in reverse. So as they're rallying at the moment, when we have the last 5 waves up for the S&P and the rest of that, anything above that or below this would also give us the same result as well. So we're getting to a point in the corner there that will be interesting. I mean, I was just sort of fingers crossed sort of analysis that would have this as a wave 4, and then the indices would go down and we can short those and the banks and everything, and then this can move up here again, So I have one more leg in each direction with everything. Anyway, just food, and also this too, we're looking at this in the commodity section, so I should really be talking about commodities as well. So yeah, so if this does push up here, that's going to put a bit of pressure on the commodities, isn't it, as well? So yeah, anyway, all good at that point. That's where we're up to. Over to the gold. So I haven't looked at GDX for a while. So GDX, I mean, for GDX, you know, we could put wave 5 in this wave 5 over here as this low here is wave 4 and 5 here, but it's not really what silver and gold, spot gold, are telling us at the moment. So it needs to come down. This is rallying because it's a stock, an ETF stock. It's sort of rallying in line with the stock market because, you know, gold can be going down and gold stocks can be going up. If the stock market is going up, they kind of, you know, the whole thing's emotional. It's from all us man boys out there gambling away, you know. So you got to kind of take that in consideration. In terms of this here, wave 2 is probably in place, but looking at this, we might get one more little move up here for that. Let's go in and just check on this as an ABC. It doesn't look quite completed. It's 100 ticks good enough to view this. Okay, so yeah, so if we look at this here as that looks like 5 waves, so I'll have to take that on board. So there'll be, that's 1 2 1 2 3 4 5, so 1 and 2 1 2 3 4 5 for third wave, A B C D E for the fourth, maybe, and down. Anyway, there's 5, looks like 5 waves down here, so that's all good. So we'll have to put the B wave here for this and the C wave up here, but let's just count that in a moment. So that would be basically looking at wave 1 here and wave 2 for this. So how does this count? Do we need to look at this as 1 2 3 4 5, or do I need to put that 1 2 3 4 5 there? So 1 and 2 and 3 and 4. Bit not that clear really. What have we got over here? Anything that's going to give us, nothing that's over here is going to give us a bit more confidence as well. Look, what we could do, I can see, you know, I can see that this, because if I count this as, I can see that's wave 1, that's not the problem, wave 2 here, but is that wave 3 and 4 here? And then up for 5. Is that the finish of it? We got to suck up that overlap at that point, or is it 1 2 3 4 here, 1 2 3 4 5? So that's a nice 5-wave structure. So is this some sort of wave 1 here with an A and a B and a C? Not a very nice C wave, can't go that way. So we might have to take that as the overlap and that as 5 waves here. But either way, what we can do, now that this is stochastics is pushing up here and this is pushing up here, so that what that will do is leave that low there exposed for the short trade. So I'm just going to remove all of that. So if that pushes up there, you can short that next time around. Just go back to the daily chart here for that. So that means that if you wanted to go short, you could short that. Don't have to overdo it, of course. So that's that. And then we need to look at US spot gold. So with US spot gold, we're looking at wave 3 here and 4 up here. And we're looking at all of this down here as wave 1. And then we're looking for the A wave, the B wave over here we're looking for. And then the C wave up here for wave 2. And so we've talked about this in the Australian video. We had 1 2 3 4 5 here for this. We're playing around with the idea of having wave 4 over here. Where is my wave 4 gone? Anyway, it doesn't matter there. But yeah, obviously this is a drop down here now. So it's quite deep down here. I mean, I was saying this morning, we could look at this as you know, a B wave here as an A and a B and a C wave down here and C wave over here for wave 2, but possible. But now this has had this little retest here, so if it has another retest and drops, you should be able to short below this, about this current low here, because we got that and we got this over here for that, so we can put that there. So yeah, look, it's tucking itself under this level here, but it's at the 61.8% from the low to the high here. It's sitting right on that 61.8%. So let's just see if it gives a little retest there. If it does give a retest there, it leaves a cleaner low at that point for another move down at that point. This is a little bit messy to get your head around, but this obviously looks like a nice third wave here. So having the 61.8% as the resistance would be good. That's good. Yeah. So yeah, so we're heading down into wave 3 at this point. So yeah, another retest of a nice bit solid. I mean, we've got a retest here. We've got everything that we need here, so we can short under here, but it'd be nice just to get that other retest there. Okay, so that's that. We've got silver next. So with silver here on the daily chart, we're looking at wave 3 here with an A wave, a B wave over here, and a C wave here. I just haven't, we talked about this before. And it's possible to have wave 4 over here, so an A wave, a B wave, and a C wave over here, but it looks pretty impulsive here, and we're looking for an ABC to come back up to the 50-60%, which is pretty close to this level here anyway, so it's, you know, it's hitting that as the resistance there. I think it's time to go in and just check on this a little bit. Now that we see it sort of fading off those highs there, so I think, right, we have this here, so 5k, let's go and have a look at 5k, see if that'll do the trick. Oh, it's not too bad. Okay, right, so this is kind of where we were. That's our wave 4 up here. I've got to bring that down so I know when I'm editing things, I know what I'm looking at. So 1 and 2 and 3 and 4, 5, so it's all good. The A, the B, the 1, the 2. Is that 5 waves in here? It looks a bit like 3, 1, 2, 3, but we've got the overlap there. But anyway, it's big wave 4 here, so 1, 2, 3, 4, and 5. This is not a very nice 5 wave either here, unless we look at a little 1 and 2 in here, 3, 4, 5. Okay, but it's kind of there, isn't it? This is too, you know, if that was 1 and 2 and 3, this is so big to be a wave 4 and it's overlap. So really, I think we've got to call that in. That's about it, really, I think. And what was that? With a little bit more accuracy here. So not quite at that 61.8%, 50%, but that's okay. I think that we're kind of, I mean, this here, I can see this little bit here as 5 waves, right? That little bit there. So forgetting about that. So that means that if this low's taken out, that would be some, I mean, look, we could look at this as 1 and 2 and 3, 4, 5 down here and then have a move back up. I mean, that could be 3, an A and a B and a C wave here and then have another move up. Shite. Would it do that? Would that be, that's just too big for that wave 4, isn't it? I mean, it's huge. I think we've got to call the top in. I think the 1900 as the resistance is the short trade at this point. That would be kind of safe in both ways. So basically that, see how we had that spike here? You need something over here, whatever it is, and then you'll just plonk that under here for that. Okay? But you have to wait for that if you want the safe trade, because but even if that came down, I mean, that would give us 5. If that came down here, that would be wave 3 in here. So that would be 4 and 5. So you might have to handle, if you decided to go short under this low here or short now, you would have to handle the heat coming back up at 50-60%. So just taking that top there, and I'm going to bring that down to 1880 because that's the first important number. And then that means that any retracement would be up here. That means you'll need to leave your stop out of the way above the 78.6 at that point. So just to be sure. So we could look at this as wave 1 here and wave 2. So yeah, I think that's the best bet. I know I should have a lot of this worked out for you before I do the video, but to be honest, I'm just so short for time, and so working out on the hop, I think it's good anyway, isn't it? Because we can kind of we can do things together in a way to a point. So that's that. So I think it's going to be something like that. Nice, that will be it. So if you don't want to take the first one over here, I mean, really, we want to be, well, the other point here too is that, if I can just refine that mess a little bit, is that this rally here will be also in 3 waves, and it might get a second low to work on here. So you could just bring that up under the second low. Look, you know, sometimes it works, sometimes it doesn't, you know, it just depends. But I'll leave it like that. And moving on to crude oil. So with crude oil here, even though we put a wave 4 in here, I don't think we got the best wave 1 here because of the structure of wave 3 here. As you know, I could view this differently. I could go an A and a B and a C up here. This A, B, C here, I'm okay with that. That kind of works out quite nicely as a B wave here, or wave, I've got it as a wave 2. But I have to say, I was kind of being a little bit hopeful with this. You know, the fundamentals are there for higher prices and stuff, but at the same time, the war's been going on and this has been coming down, you know, so it's amazing how we get the opposite of what we think that should be happening. So I'm still a bit, you know, I mean, this is not really giving me the nice 1-2 treatment here, you know. This is kind of more looking like some B wave here and A wave up here or something or other. So what we decided last time is that we were getting 5 waves up here. Okay, that's cool. We get 3 back. We had 5 here in the next one. We labeled wave 1. We had 3 coming back for wave 2. Then we could count 5 waves up here for 1 and then 2 and then 1 and 2. So basically we're getting impulse waves to the upside and we're getting corrective waves to the downside. So going long was the right thing, but the right thing for how long? We decided to take some money off the table here. I've put the stop in just above the whatever here, and I had wave 4 over here. This wave 4 looks a bit impulsive there, so I need to drag it over here somewhere, but I don't want it coming any lower than these tops here. I mean, it could come down to this top here. If it broke that top there, then we'll have overlapping wave structures, and that's why the stop is there. Well, the stop's there really because I don't want a profit turning into a loss, and we've taken a bit off, and we've kind of done a balanced view on this, and a balanced view in terms of actually make staying in the trend, because that's kind of what we want, you know. So it's kind of a balance on everything, and that's there. Anyway, apart from my ramblings, this move up here, this wave 1 here, I just wanted to look at it through different eyes as on a negative side. So we can look at it as an A wave here, and then we could look at this as an A, B, C, D, and E over here, and put the B wave here for this, and then look at this as 1, 2, 3, 4, 5 up here and finish, and then we come down at this point. So this, say 600 here, I mean, I use the level, so this will be 8650. And normally once it's in group 2, it'll stay in group 2. So if this market comes down and finds that as the resistance there, and you know we need some sort of classic trading levels pattern to secure that as resistance here, if that's the case, then then we're in some type of larger correction here that's going sideways across here that'll eventually come down if it doesn't push up from here. So I suppose we could look at that as 1, 2, 3, 4, 5 here, coming back a little bit. Does that work out? Not really, because that's 1, 2, 3, 4, 5 for 1 and 2, 1, 2, 3, 4, 5 for third wave, fourth, fifth. Yeah, nah, but still, I'll just put this in here anyway. Just want to have a look. Yeah, so any spike below that, we don't want to be. I mean, we should be looking for wave 2 to wave 3 here. We should be looking for 38.2% retracement level here. You know, not this 50 and 61.8% over here for that. So you can see why I'm scared. But we'll just give it a little bit of time. But anyway, we've locked everything up. Now it's, you know, the gates are open, the horses are bolted. We'll see if we're, you know, what we do with our tickets. So that's that. And over to natural gas. I won't go into the bigger picture. I'll just stay here. This is the low that we've been working with. Now, I just don't get 5 waves up here. I only get 3 waves up here. So last time we spoke, we were looking for a 3 waves up here. So I just put an A wave here for the time being, and then we were looking for the A wave here, and I had the A, the B here, and we had 1 and 2 and 3 here, I think, didn't we? So we got the 4th and we got the 5th here with 1, 2, 3, 4, 5 in it. So I think we got an A and a B and a C wave up here. The wave 3 normally comes in around the top here. So I think there's a bit more to play out here, and a bit more to the upside here. This distance between this low and this high here, we can add that from that high to this high, so it'll be up here somewhere. So we are going up, but I think it's part of a corrective pattern. If anybody's got any other ideas about this being impulsive, then please let me know, but it's not jumping out at me, so I got to kind of see it for what it is. I mean, I'm not saying it is what it is, just from my brain. So yeah, but this is corrective here because we've got 1, 2, 3, 4, 5 here, and we got this here, so we should be taking out that top. So it'd be kind of interesting really that, you know, once we can establish 5 waves up here, right, technically we should come down at that point, so we'll talk about that more. But if it was going to be bullish and I've made a mistake somewhere, the way that I would rectify that mistake is really just going long above this B wave here. So that would be up here as the C wave of 5 of C, and if it was going to be bullish, would have an AB, we would come 5 waves up here, have an ABC back again, and then push up again. So it would be long at that point, in case we're going into a bigger correction, a bigger move to the upside. So I need to sort of look at the bigger pattern now and reassess things, see what we've got. I mean, because it could rally much higher in a corrective pattern. It's just that the first leg here is corrective. Unless my trading platform is telling me that that's the low and not that one, or something silly like that. But still, it doesn't really give us a 5-wave structure here either, does it? I'll check on some other platforms and stuff. But it's quite clear here that we've got 1 and 2 here, and we could probably take, I've taken, I think, what have I done here? I think I can't remember exactly what I've done, but I wanted to put this here as the A and the B, all of this is the A wave here, and then an A, B, and C here for the B wave here. Because this counts up quite nice here from this point as wave 1 here and 2 here, then 1, 2, 3, 4, 5 for the third wave, fourth wave, and 1, 2, 3, 4, 5 here. So what does that leave me at? Oh, I might have made a mistake here. 1 and 2, 1, 2, 3, 4, 5 for the third, the fourth, and the fifth. So maybe that's it. Maybe we do have an impulse wave here. Let me just label that again. So that would be no, that's not right. I'll put this here and I'll double check it. Just want to go over that again. Don't believe that. That's 1 and 2. I'm happy with that. Then 1, 2, 3, 4, 5. Would that be 1 and 2? 1, 2, 3, 4, 5. So 1, 2, 3, 4. This looks like 1 and 2 in here, and 3 and 4 and 5. So that's all there. So I could do that. But does that? What does that leave me with 1? But I still need to use this then, wouldn't I? So 1 and 2, 1, 2, 3, 4, 5. So maybe that comes back over to here as 1 and 2. Okay, so okay, I'll remail that over in my spare time. That might give us the 5 waves that we're looking for. So I'll just give that a bit more thought. Yeah, it depends if you're going for the longer haul or the short haul. Let's just have a little look in here, shall we? Nut this out a bit better. This looks like 1, 2, 3, 4, 5. So I put 1 and 2 there. That's all good. That's 1 and 2. That's also 5 waves in here. So it's 1, 2, 3. A little bit hard to figure this out. There's probably 1, 2 in here. I wonder if that's just the third wave. I wonder if that's 1, 2, 3, 4, and 5 up here for that third wave. But that leaves us a little bit short because I just know that third waves like to come in across the top here, and that's why wave fours would play out slowly across here. So I can't put wave 5 to that point, and that's definitely that gap there is normally the center of the trend. That will be the third of the third taking off at that point. So this would have to be 1 and 2 and 1 and 2 in here. So we'll have to drag that across. We'll start filling in the gaps a little bit, and then this would also be 1 and 2 in here for that. I just don't know if that's a little 1 and 2 probably in here for that. So if that's that's probably about there. I mean, probably need to adjust this a bit, but they'll give us some idea of things, and we could put this over here and this over here. And then we're starting to get where we need to get to. And wave 5 over here with that wave 3 and 4. So we've got a bit of time. We've got a few sessions before we get this top here. And then we'll just have to, if it's going to be bullish, this is not going to be that big at that point. So what I'm going to do is I'm going to remove that because I'm making it look big, and that's just going to confuse us a little bit. But we will be focusing on this pullback here to go long again and building in above this number here. So we're going to reassess this situation. We'll put wave 1 here. But I have to say, once again, it's a very big wave 2. Do you know what I mean? It's like it's too big for me and my likings. This is not panning out as a really nice wave 1, but I will investigate it, but I won't bend the rules too much. But yeah, this is quite big for a wave 2, but we can take it on board. But yeah, anyway, okay, a little bit more work to do on all of that. Alrighty, I won't waste any more of your time. But yeah, it was good just to redo this situation here. Okay, cheers.